closing price of oil. Crude oil having a pretty good day here, up better than 3% at $56.91 a barrel. That is after EIA data showed a smaller than expected build in U.S. inventory. Joining us now is Scott Bauer. He is CEO of Prosper Trading Academy. And Scott, was the inventory numbers a surprise to you?
No, I don't think it was a surprise. I mean, we always get numbers that are off from what the estimates were, and the actual number was not far off. It's just that there wasn't a bigger build. So, I think that the bearishness that's been in the marketplace was looking for a bigger build. So this number, it really wasn't a surprise. However, it wasn't what the bears were looking for.
What are your price targets right now? It seems like we have been range bound here for oil. Are we looking at 55 to 60 a barrel for the foreseeable future?
Yeah, I think 54 to 59, so right in that general area. And until we trade out of that range, I'm probably not going to change my opinion on that. And if you look at those ranges outside of the, just a little while ago when we got the attack in Saudi, that range has held. And that range has held through all sorts of geopolitical events, all sorts of fluid news coming out about the U.S.-China tariffs. So that range is pretty solidified.
Scott, OPEC's influence comes to question as some market watchers believe China may be the new market mover. Are you convinced of that? Does OPEC still matter the way it used to matter?
I'm really not convinced of that. And today's market movement is really, a case against that. Yes, oil has moved on the fluid nature of the tariff talks. It has moved on what China is saying or what the U.S. is saying or what they're not saying. But today is a perfect case in point that we got this move higher in oil when all the bears were expecting a move lower for two reasons. A, the build wasn't there as was expected. And then, what people I think maybe overlooked a little bit is that Vladimir Putin came out and said that Russia is going to basically work with OPEC at their meetings the next couple weeks, December 5th and 6th. And if they look to maybe cut back a little more, Russia is going to be in line with OPEC. So, that you do see fluid movement due to the U.S.-China tariff talk, but the bottom line is the fundamentals of the marketplace of what we see, supply and demand, the builds or the drawdowns, and OPEC still matter very, very relevantly.
Scott, what's it going to take to have oil break out to the upside, do you think?
Unfortunately, I think it's going to be some geopolitical risk, perhaps another attack. You don't want to see that, but the bottom line is the supply is there, right? The U.S. shale drillers, they're prolific. They are absolutely still going after it. So the supply is there, the demand is waning. So there are definitely headwinds here. And to break out of that range to the upside, in my opinion, is going to take something outside of the fundamentals of the marketplace, that being perhaps, God forbid, another attack or some geopolitical unrest.
All right,
Unrest, excuse me.
We're going to leave it there. Scott Bauer, a pleasure as always. Thank you.